Sumit, it's Julie here. What about effect on costs from something like that? Are you seeing upward pricing pressure on your input costs? Not just from that, but I'm curious more broadly as well, given some of the other costs that we've seen going up in the economy. I mean, obviously you guys were able to make a profit this quarter, so it didn't push you down into the negative, but what are you expecting for margins for the remainder of the year?
Yeah, sure. It's a great question. So, let's talk about two types of inflation. One is the inflation, the price increases that consumers might be facing right now. And that's actually not that prices have risen. What's going on is there's less discounting and less promotional offers out there as a result of, general shortage of inventory in the marketplace. If you look at retail broadly, just not pet, just retail broadly, to address the question, the inventory to sales ratio right now is running roughly around 1.2. And that's a 12-year low because typically these ratios were running at 1.5, 1.6. So, in general, there's about 30% less inventory available in the marketplace, given everything that we're going through. And what that does is it keeps your prices generally higher and stable. And so, we're seeing that in the marketplace, and that generally helps your margin in the short term because you don't discount as often or as frequently or as much. Then on the other side, there's input costs that you talked about. And while there's certainly a possibility for that, so far I think the situation is evolving and we're just observing. So we haven't seen an impact of inflation come into costs. Right now, customers are facing that out in the marketplace, and generally there's a stable environment that actually helped us as well. We, notated 150 basis points of our gross margin, improvement in the quarter came as a result of that.
It's 15% pre-market.
So, it's Miles here. It's interesting as I go through, the quarter here. I'm just wondering if you kind of see the business taking on a new trajectory post-COVID. Certainly, you've had kind of a boom in pet acquisition, as you outlined, pulled into the last year for reasons that we probably wish hadn't happened, but it's been a benefit to your business. And I'm curious how you think about accelerating free cash flow growth, what you might do in terms of acquisitions and things like that. As again, a lot of growth you may have expected over the next 5 or 10 years really came into 2020.
It's a great question. What 2020 has shown us is the dynamics of the market and our performance. It's provided us a look into the future, and that advanced view is we're optimistic about where we're headed from here. We believe that our pace of innovation and innovating on behalf of customers to bring new products, new assortment. By products, I mean solutions, by assortment, and then perhaps even services to life should accelerate on the back of what we've seen and the technological trends shifting. For example, we've always had telehealth on our roadmap, but it was 3 years out. But the pandemic forced us all into our households and provided this boom to this sort of setting that we're interacting with today over video. And as a result, that's being felt all across the industry. And we said, look, there's an opportunity to connect service providers and customers. In this case, we're talking about veterinarians and customers, and bring them together to help offer a viable solution. And we did with the launch of our teletriage, teleconnect platform called Connect with a Vet. I think you should expect us to think boldly and broadly across, tech, product, assortments, such as we don't really play in temperature controlled supply chain today as much as we would like to. And, something like fresh, something like frozen might be, really interesting because customers have had the opportunity to stay at home, engage more, and categories like these that were slowly building have actually received a tailwind or an acceleration through the pandemic. So we're broadly focused on improving the experience that we can provide to customers across a broad array of business value kind of levers. The trick here is going to be to not get distracted, right? Not take on priorities on top of the priorities that the team's already focused on. And if we do, then appropriately, rank stack them on impact and experience to customers.
Yeah, so basically they're saying inflation didn't affect them, and basically we are doing excellent. And I actually think he's right. CHWY is one of those basically companies that I think it doesn't matter even after pandemic, the kind of solution they provide is good enough so that they will keep their customers. So I think this is one of those good plays. I was actually hoping for a little bit of bad earning results so that basically we can get better prices, but Yeah.
Sure. So, last time I was here, I think I was talking about retro toys, the boom boxes and the CD players that were really flying off the shelf. This holiday season was all about our customized goodie boxes that we curated, for customers. We introduced one for cats, the cat pet parents this time, and there really wasn't one that existed in the marketplace, and that was tremendously popular, with our customers. Cute apparel was really popular, and then with our recent launch with Disney, we've brought a customer-centric, company and kind of partnered with them to bring an exclusive line of their franchises to marketplace.
Yeah.
And Baby Yoda and Groot and all of the characters that come along with the franchise. They're really popular right now.
Yeah, so basically, as I said, it's a good company. I think you will hear good things about it more than anything else. But yeah, that was it for covering CHWY. Thank you.